So you were looking at euro dollar last week, you said, and then you
Yeah, I
re-entered
sold
this
it
today.
here,
Okay, cool,
and then I
nice.
took profit there because if I want to go back up to 104.50, why do I hold the trade off? Is it 60 pips or whatever in less than it should have been?
Yep, that
50
makes
pips.
sense.
So yeah, I was like, I want that pips, and then if it continues falling, then it continues falling. So it was pretty happy with that. Yeah.
Yeah, I like it. So, Ivan, this week, what's kind of on your radar in terms of events or charts, pullbacks? What's kind of got your attention right now?
Um, Events. I don't know if you go through the economic calendar, but it's consumer price out of UK and bank and Canada. CPI there, that is kind of on the most important radar. Then probably GDP out of Europe tomorrow, but that's kind of the economic calendar. But the other thing is just for continuation of what we are currently seeing, is that central banks are increasing interest rates. They are driving a sell-off in currencies like NOK, Aussie, and New Zealand because of slowing growth forecasts. As you mentioned in your own stream, the GDP was negative on the last reading in America. Are we going to continue to see that for GDP tomorrow? Less than expected. That's probably going to send euro lower.
Right. Right. Yeah. No. And that's the thing. I think that markets are really shook up with the idea of earnings aren't terrible in terms of stocks, but they're also not like stellar like they have been throughout the last several years. So there's just that big concern about economic growth for sure. And I like that you made that point, or that you showed that about Aussie and NZD. Some of the more growth oriented currencies out there could be put under pressure. So Aussie dollar, what's your thought?
I definitely see that it has potential to go lower. That we have made a new low now that is lower than ever since July 2020. I'm not too sure how much, also how many pips in particular you have, but as long as dollar is strong, it's going to eat away from Aussie. It's going to eat away from New Zealand.
Mm.
Mostly because we saw that when we saw on 4th of May here, where market dollar fell, Aussie gained strength and New
Mm.
Zealand gained strength, but it's the same where the money has been taken away from. It's from the same pairs, so it's more like taking candy from your little brother more than putting in new money into the market.
Fair enough. Fair enough. Yeah. So I think with the dollar, tell me, I'm curious to hear what you think about this. The dollar, I've been getting a lot of comments, people asking about what causes the dollar to crack, because there's so much stuff riding on this. And I feel like we've talked about this before, but for newer viewers, what causes the dollar story to crack? What do we need to hear? What do we need to see to get this dollar to calm down, to perhaps give some other currencies and other asset classes a chance to have a turn? What do we need to see? What do we need to hear?
First of all, when you have a central banking monetary policy stance, hawkish in this case, it's a very clear direction until they choose a different direction. I think that's what people are caught up in: short-term volatility, or like, well, a dollar rose last week, so it shouldn't do this week, and it should probably not rise next week either, because now it's been rising so much. That's not the story people need to learn. You need to learn the story as long as the Fed is going to increase interest rate as quickly as they have been pricing in now. It is now 3 times 50 basis points. That is 3 meetings, 50 basis point rate hikes. That is very aggressive. It's not the most aggressive, but it's very aggressive. So that's, as long as that story is still there. So what is the story you need to hear that will make that crack? Well, then inflation should go lower. Inflation was higher than expected last week.
Yep.
GDP should go lower, and employment should go higher. So employment rate should go. Unemployment rate should go higher. We haven't seen that.
Right.
We've seen the opposite.
Yeah, and that's such a good point that you make, Ivan, because the thing is, it's like it's so easy to get, and I've been there, right? I think we all have. It's so easy to get caught up in the simple idea that this thing seems too high. It's got to come back. It needs to relieve. But the problem is with that is, like you just said, everything, the wind is in the sail of the bulls for the dollar until it's not. When the wind changes directions, we change our thought process. But you and I, we've been dollar bulls for a long time. And it's not that we're geniuses. It's just that we aren't changing until the story changes. You might be a genius. I'm not a genius, right? So when I look at the dollar, the thing is, it's like you said, trying to call a top is very tempting, but very, very hard to do. And we need to wait for, like you said, some of those metrics to come out and perhaps the stance of the Fed to change narration a little bit first.
If anyone remember the election and where Trump lost the election and Biden won instead, nothing about political, but with the wind here, as you can see, was dollar bearish, and that was still the stance of the Fed. The Fed doesn't change their stance just because a new president is elected.
Right.
And I remember this very clearly because the retail sentiment was like, now it was really buying dollar. It was like 70 or 80% aggressively buying dollar, and they're losing every single day. And then never let go of that belief the dollar is going to rise. So it's like every day, okay, now it's going higher, now it's going higher, now it's going higher. But as you can see, in this period where I was calling for dollar bearishness, it was falling 400 points. Like, why can't you, first of all, listen to us? Second of all, follow what the central banks tells us to do, or what the effects of their central banking, what their monetary policy is.
Yes.
Instead of being like, well, today the moon is on the opposite side of the sun, so there might be a change in the market.
Yeah, and that's, again, another amazing point, Ivan. The thing is, right, so many of us want to be that inner contrarian where we say, well, the Fed's saying it today, but I'm forecasting that tomorrow they'll change their mind. And it's like, well, they could stay on that stance for 6 months, and you're going to sit there and fight the Fed for 6 months. And that's the old mantra of don't fight the Fed. It's like when the Fed changes their direction, we will just simply follow. We don't control these markets. They do. So it's trying to follow along rather than try and predict what they're going to say next.
So this is the day where the Fed changed their mind, and June, and this is the day where they changed their mind. This is when they say, well, we're going to add supply, dollar falls. This is where we're going to take away supply, and dollar rises.
Right.
It's as simple as that.
Yep.
Let's face it, if you're trading Forex without a winning trading plan, you're gambling. You need a model that is going to long-term net you a profit. Our team has put together a free guide on how you can actually create a trading plan.
All you have to do is use the link down below in the description.
Send the word template to our team on Telegram and we'll send you a copy. Again, hit the word template in your Telegram, send us a message, and we'll get back to you with a copy of the free trading plan template.